This video, I want to focus on the biggest event that is happening this week. It's the Nvidia earnings report. Obviously, this is arguably the most important earnings call of the year. This call itself has the ability not only to influence and guide Nvidia stock, it can certainly guide the memory stocks that we love in this company. It can guide the equipment suppliers. It can guide every company related to the AI boom and certainly the greater tech sector as a whole. Nvidia, as you know, is the largest company on the S&P 500. It is a $4.5 trillion company. This report will have massive implications across a lot of companies. It is a must watch on Wednesday. So if you're an Nvidia shareholder or you're thinking about buying the stock, this is the call. This is the video that you're going to want to listen to, because I'm going to jump in and talk about what exactly we need to see, what we should be listening for. And I'm also going to give you my best case, bull case, as well as bear case that could happen after the call on Wednesday, and ultimately my 12-month prediction for where I think this stock will be. Before we get started, though, just as a reminder, I'm not a financial advisor. You guys know that everything I'm going to share is based on my own analysis. So make sure if you're going to buy the stock and if you're going to invest in any stock, that you do the research yourself and make sure it fits within your own risk tolerance. So let's get started. Hit like and subscribe if you haven't already, but let's set the foundation for what Nvidia has achieved in the last quarter. And you can see on your screen now, in their fiscal Q3, they posted $57 billion in revenue. This is non-GAAP revenue. It was, you can see this bottom line I like, which is they're the world's largest networking business right now. And you think about where the data is coming, or where the revenue is coming from. So it is the data center business. This is 90% of the business right now, or at least it was in the last quarter for Nvidia. $43 billion in compute, $8 billion or just a little over $8 billion on the networking side, which is a real secret revenue source for Nvidia moving forward. We'll talk about that in a moment. But I want to give you just an overview of the full P&L from the CFO for Q3. And I'm going to focus on that middle box, which is the non-GAAP revenue. But you can see the $57 billion was a growth of 22% over the prior quarter. Guys, 62% over the prior year. Gross margins running at about 74%. They've achieved 75%. They're in that low to mid 70% range for gross margins, which is fabulous for the company. And they had an earnings per share of $1.30, which beat estimates by 5 cents. So overall, outstanding quarter for Nvidia. You have to remember, this is a company that has beaten expectations in 20 of the last 22 quarters. It's an expectation on the street that Nvidia is going to beat. How much will they beat by? What is their guidance moving forward? That's what everyone is looking and listening for. But we think about last quarter, as I mentioned, 22% growth in revenue, 62% over the same period prior, or year over year. What did it do to the stock? And that's what I want to show you guys, because this is what the type of environment and pressure that Nvidia is under. This is a reflection of from that earnings call to where we are today. I took this snapshot earlier today when they were trading about 191 a share. This goes to show you that they haven't done much since that earnings call. In fact, today, Nvidia, or at least when I took this snapshot, is trading about 10 to 11% below their 52-week high that they achieved at the end of October of 212 a share. So with that fabulous revenue that they posted, this company has just been flat. They've been staying in that kind of that 180-ish range, mid 180s to about 190, just not a lot of movement whatsoever, just kind of found that little groove. And what's it going to take for them to break through, for them to pop post earnings, and for them to drive towards that price target that most analysts have them at, which is about 253 a share? That's exactly what I want to talk to in the call. What I'm going to be listening for, what you should be listening for as investors as well. There's 5 topics that I want to talk about. But first, let's ground ourselves in what the expectations are from Jensen. The last thing I want to show you on the screen is what they've guided for in the last quarter to this quarter. So you could see their guidance is $65 billion in revenue, achieving about 75% in gross margin. And though it's not on the screen, their earning per share expectation is around, I think it's about $1.50 a share. I think it was somewhere between 147 to 152 a share, which would be a nice jump over a prior quarter as well. So that's what they're guiding for overall. And what I have to say first before we jump in and talk about a couple of things is the 65 billion as they guided for is a strong number over the prior quarter, 57. I think even if they hit a 66 billion or even slightly higher, most analysts would consider that a modest beat. And the reason why is there is this whisper number that is floating, and I put it on my thumbnail. It's the 67 billion. I think that the feeling of the sentiment for Nvidia to really pop in the after hours is they have to achieve 67 to 68 billion in revenue in the quarter. If they can do that, I think you'll see significant movement for this. They'll push past that resistance level we've seen around 194 a share. They could potentially even move closer towards their 52-week high of 212. Maybe not in the after hours, but beyond the path for that. I think we also have to listen to the forward guidance. We know in this channel that forward guidance now is more important than anything else. It's more important than the numbers that already happened. What the market is listening for now, particularly with companies like Nvidia, is where are you guiding for in the next quarter? And, you think about if Nvidia's guidance, if they come in and they guide above 75 billion for that next quarter, that will drive this stock. That will cause it to pop. Analysts are expecting them to guide anywhere between 71 to 75 billion for Q1 2027. But if Jensen comes out with strong sentiment, confident comments, and pushes this stock above 75 billion in guidance for the next quarter, this stock has an opportunity to move. And we know that forward guidance is the most important thing at all these companies, particularly these high-tech companies right now. But here are 5 things that I'm looking for, and you should also be looking for as investors. Number 1 is just the Blackwell status. Blackwell ramp status, we'll call it overall. It's their most important asset right now. It's their current GPU architecture currently. It's been on fire in sales. The question will be, is it ramping as fast as supply constraints allow, or are there any bottlenecks associated whatsoever? The other thing focusing both on Blackwell and Rubin for me will be everything related to high bandwidth memory, particularly HBM4. That's a key thing I'm going to be listening for, because who are going to be the big players for them? Will it be SK Hynix, Samsung, Micron, I hope? Will it be all 3, or is one out of the mix? That'll be a big piece. If Jensen mentions anything about that, it could have a significant impact on the memory companies as a whole. But if Jensen says the supply chain is clean for Blackwell and it's ramping smoothly, that is a massive green flag for the company. It's something the market will love to see. And if there are any hints of any supply issues, it could put pressure on the stock. The other next piece will be number 2 is the Rubin architecture timeline in particular. So we've heard some news already that production was already underway in full production. Will Jensen confirm that, or was that a premature news article or premature prediction for Rubin itself? So I'm listening to see, will he confirm that production? Are there been any customer commitments for Rubin? Are the big hyperscalers, Amazon, Meta, Microsoft, Google, have they already signed orders for Rubin? That'll be important to know. Pricing for Rubin, is it the same? Is it lower? Is it higher? I think it will be for Blackwell. So are the average selling prices going to be higher with the Rubin architecture? That'll mean a lot for margins. It'll mean a lot for revenue overall for Nvidia. The last piece will be transition. If he mentions anything about the transition between Blackwell to Rubin, it'll be important. Will it be a smooth transition? Will there be any gaps? Are customers holding back, waiting for Rubin and not placing orders for Blackwell because they want the most new, the hottest chip, the hottest GPU? If there is any gaps like that, it'll create pockets in revenue, which could put pressure on the stock, could create a bit of a loss of confidence. So that smooth transition between Blackwell to Rubin is key for us to listen to. The third thing I'm going to listen to is customer mix. Who is buying and why are they buying? This is something that Wall Street is increasingly focusing on, because it has to be on, their buying has to be on more than just the big 5 hyperscalers. Are they getting deeper into their enterprise, into the sovereign business that I'll talk about in a moment? But the hyperscaler demand, the big 5 that we know, particularly ones that have put up over $700 billion in CapEx, Microsoft, Alphabet, Meta, Amazon, and Oracle, we expect them to buy. that's the bedrock of the Nvidia business. We expect that piece. But what we want to hear is, are they making inroads with enterprise, with sovereign customers? Are they able to shift their percentage mix overall? Are they broadening beyond that big five? That's a real positive sign for the stock, if it is, because that's a sign that the AI build out is structural. It's not a bubble. I'm also listening for that networking side. And you remember, it was just over 8 billion in the last quarter. I think that's a secret weapon for Nvidia. They're shifting that way. They're moving beyond just the GPU or the brains of the data center. They're moving into the nervous system or the Ethernet or the InfiniBand. So listen for Spectrum X Ethernet revenue. That'll be a big component. If that's growing, that's a great sign for Nvidia that they're going to develop another revenue stream, a key revenue stream for them moving forward. The fourth thing I'm listening to is sovereign AI. So we saw just 2 weeks ago, I think it was, there was an agreement reached with venture capitalists in India. This is an ongoing, a great opportunity for Nvidia as we see that sovereign and AI, so nations, not companies, are building their own domestic AI infrastructure because they want to ensure data sovereignty and they want to ensure national competitiveness overall. So countries like Saudi Arabia, UAE, Japan, France, India that I just mentioned, and other multiple EU member states are investing today. They're investing heavily in domestic AI clouds powered by NVIDIA's chips. The segment is expected to contribute, I believe, $20 billion this year in annual revenue, or in their fiscal year 2026, in annual revenue for them. And it's largely insulated from that U.S.-China trade tensions because these are allied nations for the U.S. So listen closely to see if Jensen has any updates on the scale of sovereign AI pipeline, if he mentions specific country deals or a growing backlog of government contracts. That's genuinely additive revenue that the market hasn't fully priced into the stock. So that could drive some upside potential. And then finally, the last thing, which is probably the biggest elephant in the room, the fifth thing, which would be the China situation for NVIDIA. We know that the stock today, or their guidance today, let me take that back, doesn't include any meaningful data center revenue from China. So we also know that they did get clearance for the H20 chip. It's a downgraded version of their chip, but it does meet the export rules, and they've received regulatory approval to sell it in China. So if Jensen mentions any type of progress there, any kind of breakthrough with China sales, even if it's partial, positive news, that would be a massive upscale potential for the stock. It would be positive, unexpected revenues for the company. On the flip side, though, if he mentions further tightening, or if China is not looking to partner, if they're trying to build their own sovereign AI and use their own chips for there, that could have put pressure on the stock as well. So we'll see. It's very curious to see what Jensen guides on that piece. So those are the five that I'm looking for. And then finally, in closing, I'm going to give you my bull and bear case overall. So my bull case is pretty bullish, but let's just say that NVIDIA comes out and they hit 67 billion in revenue, and they guide for next quarter of 75 billion. And Jensen says everything looks great with Rubin. We're making progress with the H20 chip in China. In fact, we have some revenue to report. If that type of scenario happens, I think we can see an immediate jump of probably 10, 12% overall with the stock in the after hours. I think it could break through that 194 resistance level that I talked about and make its way towards passing that 212 52-week high that we saw back in October. The longer, in this scenario, the longer bull case for this would be in like 12 months. We could see within the 12 months, NVIDIA hitting 260 a share. That's up 35% from where we trade today, 36% from where we trade today. And it's definitely in line with price targets that we see in the market of around price targets analysts have around 253 a share. That would be an amazing bull case. I would love to see it for the stock. Now, on the other side, the bear case, which I think is unlikely, but I'll put it out there. If they hit 65, what they've guided for, and their guidance for Q1 comes in around 70 billion, and if management causes any concerns about their GPUs related to memory or any type of supply constraints or any language around tightening whatsoever, that will put pressure on the stock. that will be seen as, even though they hit, as a miss for Nvidia, because we want to see them achieve more. And in that scenario, I can see Nvidia sell off in the after hours 5 to 7%. I think you could see them get to that 180 range, 178 to 182 range, and that become the new support level moving forward. Because remember, Nvidia doesn't have to miss. If they hit stock, but just don't hit their number, but don't give great guidance, that's kind of considered a miss for them, because we expect perfection with this stock moving forward. So my overall take, guys, of what I'm looking for on Wednesday, and what I'm looking for, and in reality, no one has a crystal ball here. No one knows to expect. So we'll have to wait to what we see on Wednesday. But I feel confident that they'll drive towards, I hope that's 67, but it's probably like 66 billion, maybe 66.5 billion is the revenue. But in general, I love this stock long-term still, because the fundamental stories with Nvidia have never been stronger. The Blackwell ramp is real. The Rubin demand is real. The sovereign AI story I've talked about is real. The hyperscalers are not slowing down their CapEx spending. That is real. And the valuation for Nvidia right now is the lowest it's been in multiple years. My 12-month price target for Nvidia, where I hope I can see this stock get to, or where the stock will get to, is probably in that 230 to 240 range, which represents a good 23 to 25% upside from where the stock traded today. So that's everything I'm looking for and listening for this week's report, the biggest report that this tech sector will have this year, most likely. We've covered the consensus numbers, the 5 things that you should be looking and listening to for as an investor, and I've given you my bull and bear scenarios. So as always, guys, thank you for jumping in and listening to the video. Let me know in the comments below if I missed anything, if you're looking for anything differently, but I'll look forward to seeing you on the next one. Take care, guys.